Hi, it's Brian again. Today, I'm going to show you perhaps the most important thing you need to know about margin trading using MetaTrader 4 on any markets, cryptocurrency or forex or anything, how to protect your money using stop losses. Nobody wins even close to 100% of the time, and mitigating your losses can be one of the most important skills in currency trading. If you only watch one of my videos all the way through, please make it this one. Stop losses will automatically close a trade for you if that trade goes too far in the negative. Without adding a stop loss to your trade, you run the risk of it going the opposite direction you want until you hit your margin limit and lose a bunch of money. With that being said, setting a stop loss too close to your entry point will make you unable to make much money, as all markets naturally fluctuate, and exiting your trade too early can make you lose a lot of money in the long run as well. First, I'm going to show you how to set up and change stop loss values in MetaTrader 4. Then I'll go over some real world examples so you get an idea of what this means, what all this means, and what kind of values you should use for your stop losses. The easiest way to set a stop loss is when you initially open a new order. So click on New Order in MetaTrader 4. Here you'll see the stop loss field. If you're buying, which means expecting the value of the currency pair to increase, you want to set the value of the stop loss below the current value of the currency pair. If you're selling, expecting the value of the currency pair to decrease, you want to set the value of the stop loss above the current value of the currency pair. The value is represented here, so you can just sort of eyeball it at first, or I'll show some methods for picking a more specific stop loss. With the stop loss set on an order, you'll see two lines across the MetaTrader chart. Here's an order I placed earlier on the Bitcoin US dollar currency pair. I shorted the pair, so my stop loss is above the entry point. My entry point is represented by the green line, and my stop loss is represented by the red line. If the value of the currency pair rises to the red line, my order will be closed as soon as possible. I will lose money on that trade, but not as much if there wasn't a stop loss there and the value continued to rise. I can change the value of this stop loss at any time by simply clicking and dragging the red line. The first time you do this, you'll get a modal window that pops up and asks you to accept the terms of changing the order live. You only have to do this once, then you'll never see it again, and you can just drag it around like you see me doing here. So let's look at a real-world scenario where stop loss would have been helpful on this chart. You'll see here that a sell order would have done very well along this dip in value. Once it got to here, though, the value reversed, and if you didn't close your order at its peak down here, then you would have lost a lot of those gains. You still would have ended up ahead, but it wouldn't have been as good as if you closed down the trade down here. The stop loss, when it was still would have been somewhere up here, based on when you, assuming you placed the order here and set a stop loss that was above it because it was a sell order. The stop loss still would have been somewhere up here, so it wouldn't have helped you much. You could have manually moved the stop loss down over the course of these couple days. You know, as you see it, the value dropping and you making money, you continue moving the stop loss down. Or you could have used something called a trailing stop. If you right click on the green line, once again, the green line represents your entry point on the order. You have the option to set a trailing stop. You can set a certain number of pips, which you can see by selecting the crosshair and dragging anywhere on the chart. So going back to my existing trade, I had it somewhere around here. You can select the crosshair and see that I had set that stop loss to somewhere around 40,000 pips. The pips are represented here. You see those three numbers. The middle number is the length of that line that I was drawing there. So I set this stop loss to about 40,000 pips. I actually have a moving stop set to the same value. So what this does, the trailing stop, what this does is as the value of the currency pair changes, the stop loss automatically moves with it. So with a trailing stop set to 40,000 pips, your stop loss will stay at 40,000 pips behind the highest profit value your order has yet achieved. It will only move in the profit direction, in this case down since it's a short sell, never in the other direction. A trailing stop will only start moving after you've gone the 40,000 pips after the entry point. So in this trade I'm in now, the red line will only start moving once the value dips to somewhere about here, at which point it'll jump up to about where the green line is, and that means no matter what, I broke even on this trade. So back to our original example here, if you would have placed a sell trade somewhere up here and set a trailing stop of 40,000 pips, then this your stop loss would have automatically moved down along with it. Once you broke that initial threshold of 40,000, you wouldn't have had to do anything, and this would have continually moved down until here. Well, it would have been 40,000 pips behind, so it'd probably get somewhere to here, and it would stop going down as the value raised. And then if you had it set to an appropriate value, then once the value of the currency started going down again, it would keep going down until you got to about here, which it would do the same thing and go down and down and down to here, at which point it would have stopped going down because the value of the currency pair stopped going down. When the value of the currency pair started going back up and crossed this red line, your order would have been automatically closed out, and you would have kept all of the gains you made by this long downturn and your short sell. You can see in this example also why you would want to give your stop loss some room for normal fluctuation in the market. The overall direction of this chart is down, but there are areas where the value rose for a little bit, then fell again. If your stop loss was too close, if the trailing stop was not set high enough, your stop loss would have gotten somewhere in here, and then when the value of the currency pair rose to here, you would have been stopped out of the trade, your order would have been closed, and you would have missed all of these gains. There is no one value everyone agrees on about what you should set your stop loss to. It really just depends on how that fits in your overall trading strategy. At the end of the day, even with the best trading strategy, there will be times when your stop loss is too small and you miss out on those big gains, like right here. And there will be times when your stop loss is too big and you lose a lot of the gains you already made. There is potential for that here. In the future, we will be going over specific strategies, but you've got to understand they all fail sometimes, and you need to be prepared psychologically to deal with that, shrug it off, and move on to the next trade. Two good books for dealing with the psychological aspects of trading are Trading in the Zone by Mark Douglas and What I Learned Losing $1 Million by Brendan Moynihan. I highly recommend picking up both of those and giving them a good read. Neither are very long. You could probably knock both out on a long holiday weekend. I put links to them in the description of this video. So one last note on stop losses. If you enter a stop loss on the new order screen of MetaTrader, that value is attached to the order itself and is held and managed by the exchange. As you've seen in previous videos, in this case the exchange is btc-e.com, the Bitcoin exchange, or in forex trading the exchange would be forex.com or another similar exchange. Trailing stop values are managed by the MetaTrader 4 software itself. What that means is that your trailing stop will only be updated, meaning it will only follow the value and keep moving, if MetaTrader is open and up and running on your computer and connected to the internet. If your battery dies, your Wi-Fi goes down, or something like that, the latest value of the stop loss will still be stored in the exchange, and your trade will be exited if that value is reached, but your trailing stop will discontinue moving. Summary, I never place a trade without also setting a stop loss, and I recommend you do the same, not only to protect your money, but to protect your sanity. This kind of trading can be fairly intense psychologically, and I really highly recommend playing around with stop losses on your demo account on a few trades to see what works for you. As always, let me know in the comments if you have any questions or anything to add, and have a great day.